Yeah, what up, guys? Yeah, I want to show you something about market structure, like the bias of the chart plus liquidity. Yeah. So as you can see this illustration, I'm not gonna be making this video too long. Maybe 3 to 5 minutes or something is okay. So I'm gonna be showing this illustration, and I think you all can see that it's being displayed on the screen right now. So as you can see this market is selling here. You can see it's a downtrend. As you can see, the market is, according to these charts, according to this analogy, the market is kind of selling, right? So the market is currently selling according to this diagram. So as you can see market keeps breaking lows to the downside. This is the first low, market broke it to the downside. Yeah, we have the second low, market broke it to the downside. So same thing applies to this. So same thing applies to this too, yeah. So it's fine. We already know that this market is selling, and we know that whenever market is selling, market needs to be breaking the recent lows to the downside until market shift the recent lower high before we can say the market wants to buy. So, and according to this one now, we can see market keeps breaking the lows to the downside here. So that means the market is selling. Now, how do you now identify liquidity on the chart? How do you identify liquidity on the chart? So it's not something that is very hard. Whenever you see your major breakout, like whenever you see a BOS to the downside, are you getting me? So as you can see now, you can see this is a BOS, this is a breakout structure to the downside, another breakout structure to the downside. So now, how do you now identify your liquidity? Liquidity is very simple. Whenever you see, you know, whenever you see market breaking from either recent low or recent high, but according to this, they are talking about the selling side. So whenever you see market breaking from the recent low like this, if you see a very sharp that is not even up to 50% of the Fibonacci, something like this is what we call this is what we call a liquidity. This is a liquidity side. Market needs to clear it out before selling. Are you getting me? So same thing applies to this too. This one too is a liquidity pool. Market is only creating liquidity here. Yeah. So some people will do something like this. They will say this is their own breakout structure too. So they will be looking for a sell somewhere here, and as you can see, market will just take them out. Are you getting me? So that means this pullback is an incomplete pullback. That is an incomplete pullback to our other block or whatever you trade, either fair value gap or whatever. So I'm not going to that. I just want to show you guys how market structure and liquidities works together, what you need to know. So now, as you can see now, we have our what? We have our liquidity here. You can see market take out this liquidity. Market took it out. After taking it out, market came back and break the low. Then market continue to the downside. So it is just as simple as that. So whenever you see, first of all, first thing for you to do is to know your bias, to know your directional bias. Once you know your directional bias, just look for your liquidity, then wait for market to clear it, then you execute your trade. It's as simple as that. So maybe let's just go to the real chart. Let's see what's up with the real chart. So this is volatility 101x. Let's just look for recent breakdown to the downside, like recent BOS to the downside. Recent BOS to the downside. So as you can see, we have one here. This is a low, market broke it out. We have another one here. This is a low, market broke it out. Whereby this is going to be our what? This one is going to be our major high. If market should break this high now, that means the market wants to buy. As you can see, when market came to, when market touched this high, you can see market was unable to break it. The price was unable to break it then. Market continued downtrend. So how do we identify our liquidity? Like I said, we've already seen that this is our recent low. Market already broke this recent low to the downside here. Now, where is our liquidity? This is a 1 hour time frame. Yeah. So you might not really see it clearly on 1 hour, but if you are a pro, you should be able to see it. As you can see, we have a liquidity here. There's a liquidity resting here. Market needs to clear it out first. Are you getting me? Before you can be saying you want to be looking for a sale. But if you want to see the liquidity very well, if you're analyzing on your 1 hour, definitely you should be using maybe probably 15 minutes or 5 minutes. You know, we have different type of time frames. Yeah, we have the bias time frame, we have the trend time frame, and we have the entry time frame. So according to this, if we are using 1 hour as our bias time frame, so our 15 minutes should be trend time frame, while 5 minutes is going to be our confirmation entry time frame. So now, as you can see, even according, if we should analyze this one too, you can see that here we have a BOS here to the downside. This is the leg that market broke to the downside. So now, where is our liquidity? This is a liquidity, this is a liquidity too. This was the high that market must not break. This one here was the high. As you can see, market was unable to break it too. So that's how to identify, that's how to just, this is just the basics on how to identify market structure, directional bias, and liquidity. So it's nothing really rigorous like that. So you just have to follow the trend. So now let's go to 15-minute time frame, which is our trend time frame, and see the liquidity very well, because you cannot really see the liquidity very well in 1 hour, since 1 hour is your bias. So if you want to see the liquidity very well, you need to use your 15 minutes, that which is your trend time frame, to check it very well. You can go lower, maybe to your 5 minute time frame or whatsoever. So if you go to 15 minutes now, you will see we'll be seeing it very clearly. Let's just zoom this side. Let's zoom somewhere here. Let's zoom somewhere here. So as you can see now, you can see after this BOS to the downside, this is a liquidity. So you need to wait for markets to take this liquidity out. So whenever you see your confirmation, depends on the confirmation you are using, then you can execute your trade. Are you getting me? So it's as simple as that. Like what I drew on the former screen, as you can see, according to this 15 minutes, when market broke this low, what did market did? Market formed an incomplete pullback, then break it again, then now started going to the upside. So that is just how to identify liquidity. So if you want to identify your liquidity, make sure your directional bias is intact. After your directional bias, then you go to your trend time frame to do what? To identify your liquidity side. That is what you are going to be waiting for, because market needs to take out liquidity first before market moves. Liquidity fuels the price action. So you have to wait for that to happen before you can say okay. So if you check this one too, you can see market took out this low. Now where are the liquidities? As you can see, just like I drew, it's very more obvious on this 15-minute time frame. So this is a liquidity here, and we also have some kind of liquidity right here. Yeah. So market took it out. As you can see, market shifted structure again and started selling. As you can see, market shifted structure and started selling to the downside, something like that. So it's as simple as that. So I don't know if this is really helpful for you, and just share it to your people so that they can learn. So maybe some other time I'm going to be sharing something, I'm going to be sharing more something deeper about liquidity and market structure. This is just like a basic thinking that you guys need to see, to understand first, before you can go deeper into market structure and liquidity. So see you next time, guys. Thanks.